Hello, and good morning. Welcome to today's episode of Three Wise Men. A day delayed and a wise man replaced, but the show must go on. I'm joined by Justin and Mr. Jalapeno, or as he's now known, George. How are you both?
Haller's changed his name. Doxed himself.
I've got nothing to hide.
Good morning. Yeah, good. Thank you very much. Just waiting for chaos, hopefully later.
Yeah, a lot of chaos expected today. Although we saw some of it yesterday. A lot of the, I don't know if yesterday was front running today a little bit, but obviously we saw the Mag 7 hammered down a little bit. And a nice little bit of relief. But yeah, I'm expecting some chaos, principally NVIDIA earnings tonight. It'll be interesting to see, A, if they hit, B, if they give good guidance, and C, if the market likes it. So it'll be quite interesting. It's got an implied move of 7.5%, which equates to about $400 billion. So the implied move is bigger than all but 35 companies on the planet.
Oh God!
So a lot of capital maybe trying to find a new home. It's crazy how big that thing's got. But I think we're seeing some of it start to front run. Obviously, we've had Saudi Arabia in the White House promising $1 trillion. We'll say I'm not quite sure where Saudi Arabia is getting $1 trillion from with oil at $60 a barrel. I think they need oil a little bit higher to be promising those sorts of capital. But yeah, it'd be interesting to see. What are your gents' thoughts on NVIDIA, on Saudi, on anything really?
I'll let George go first. Say something smart, George.
The thing is, I can't say anything smart on that because I don't really pay attention to stuff like that. I actually haven't looked at NVIDIA in a while. I mean, what is it actually doing at the minute?
It is $182.48
on the NASDAQ.
Currently on the NASDAQ and on the S&P.
I mean, the only stock that I recently looked at was MicroStrategy, and to see the crypto Twitter empire that Michael Saylor has built seemed to be getting scammed.
Yeah, I don't like MSTR. It's, I don't know. I'm still quite bearish on it. I wouldn't be shorting it here. I don't know. I have very little interest in MicroStrategy anymore. I'm very much of the case I'd rather just buy Bitcoin. Obviously, I wouldn't rather buy Bitcoin at these prices. Prefer it a little bit lower, but yeah.
I mean, the people that buy MicroStrategy, do they, in their minds, are they almost considering it as though they are buying Bitcoin? Pretty much.
Yeah, but it used to be that it was a good trade because you got a premium on your Bitcoin when it was trading at like two nav or 1.5 nav. You essentially were getting leveraged Bitcoin. The issue is now you are getting Bitcoin that is below the net asset value of what you're buying. And it was the proxy for institutions and sovereign wealth funds, etc., to get Bitcoin exposure before the ETFs came in. I think the ETFs were probably the nail in the coffin for MSTR as a use case.
Yeah, makes sense. I just it's just not something I ever delved into. I just
don't care, do you, George?
No, he's just got his little Forex.
Just look at the chart. You just trade what I see.
He's got his little Forex pairings.
I'm not the news guy, unless it's red folder news, and I have to take it into account.
I love geopolitical news. I love it when it gets tasty.
Yeah. Well, my thoughts are whatever the investment is by Saudi, whatever, it's just kind of don't really mean anything. It is what it is. I can promise all the world. I could probably say I promised the US $1 trillion over the next 10 years. Don't mean I'm going to give it to them. And the thing is, that's in trade deals, right? That's buying weapons, that's buying planes, that's buying energy, AI, whatever it may be. So it's kind of, it's just a promise to kind of do business together, right? It is what it is. Nvidia, so that's my thoughts on the Saudi stuff. Nvidia is clearly, in my opinion, it's front run, the way it's pulled back. Now, has it front run to go up or down? I cannot tell you. It is, in my opinion, neither. It can flush down to 160, 163. It could go up and make new highs, but to me, we're exactly on the fib level as it currently stands. So if it drops, then it'll probably come down to the next one, which is $171. I wouldn't be surprised if it has a bit of a push. Like normally, the front run goes in the direction you expect it to go in. So if the news is bad, it'll probably come down, and then it will go for the Uno reverse card. But I also don't care. I really don't care. I think the bigger macro issue, as you know, is the Japanese bonds.
Yes, I will flash up the Japanese bonds because.
Can someone explain this to me like I'm 5?
Oh yes, let's get the macro news.
I reckon shoot a bit lower, maybe 3.
Let me just put this on the screen. Yeah, Japan is one of the most interesting macroeconomic case studies, I think.
Yeah,
there is, because this is a forewarning to the world. Look at the state of this.
Do you remember saying not that long ago that it is the ghost of Christmas future potentially?
Yeah.
UK.
Yeah. This here is it's mental.
The scary part's the 14, the longer end.
Yeah, the long end, because they even have so they're a little bit different, the Japanese, in the fact that they even have like longer yields than you get in the rest of the world. So you've got 40 years.
Yeah.
So what does this actually mean then? What does this like?
So this is
I am stupid.
So this is the rate in which people are willing to lend to the government.
Oh dear.
Obviously, the higher this is, the more risk there is associated with the government servicing the debt, and there is more cost to the government servicing the debt. Obviously, you want this to be as low as possible. Well, you are if you're a country, because you've got stupid amounts of debt that you're trying to service. This march up here equates to mind-boggling sums of extra money that the Japanese government now has to find, which is already in a deficit, which means it has to borrow more. This is what many would call a death spiral.
So if you think for years and years and years, George, and I'm talking since like the early 80s, 90s, I suppose, that Japan has basically, it's cost you money as an individual to keep your money in the bank.
They had negative interest rates. People buried piles of cash in their garden.
Right.
So it was negative interest rates. And it basically, the economy was growing. So you've got negative interest rates at a consumer level. And then the interest rates whereby other countries institutions, banks and stuff would then lend money to the Japanese government to be able to function was then lent, not so much on the long end, but on the short end, it's definitely basically zero.
Yeah.
So you was going, right, I will issue you with bonds, and I'm not getting any yield on it, but it then enabled you to hedge it and then issue bonds on the back of like the euro, the dollar, the pound, and stuff like that.
Yeah.
So if you think of that as your foundation of your economic model, you kind of go, right, we are doing this, we'll put money in Japan, we know it's not going anywhere, and then you were able to basically leverage off the back of that.
Yeah.
Now, this suddenly, the issues that Japan and a lot of Asia has, or most developed Asia has, is an aging population.
Yeah.
Negative birth rates. So you've got to think, you've got an aging population which costs more to look after with social care and stuff. And then you've got less young people being born, which means you've got less people to pay for the older people, effectively.
So the replacement rate is really. I saw a statistic on it that was really. So Japan has a median age of 45. So the majority of their population is either retired or nearing retired, and they are forecasted at current rates to lose 80 million people in a single generation.
Yep.
Which is nuts. And obviously from the Japan point of view, and one of the risks that there is and has been to the rest of the world is previously with Japan's rates being so low, is you've had a lot of companies and a lot of individuals of whom they had what's called the carry trade. So you could borrow a load of money from Japanese banks and stuff in yen, and you would buy overseas assets. So the Japanese are one of the largest holders of US sovereign bonds, of UK sovereign bonds, European sovereign bonds. There's a lot of S&P 500 exposure in there. Essentially, it's like loaning from a bank at 3% to then loan to someone using Wonga rates. Like you could basically borrow at 0.5% and then get a yield of 3 or 4% elsewhere, and have that difference, because Japan's a really weird setup in the fact that you also have this central bank policy, but you've also got this Japanese patriotic duty of a lot of companies will unprofitably hold government yield on their balance sheets. It's a
very insular kind of country in itself, that they're obviously that they operate in a very respectful way of the Japanese culture. Obviously, very westernizing the goods that they like to purchase and holidays and all stuff like that. But the actual culture of how they live their day-to-day lives is very, very unique. And like you say, there's a lot of honour and stuff like that. They'll take stuff on the chin for the greater good. But it was basically that's house money, that's home base. The whole financial system was based off of, or a lot of the pension funds and stuff like that was based off of, we'll take the Japanese bonds, we're not going to get a yield, but we know it's a safe investment, and then we can basically hedge against other currencies on that. The fact that this is now gone, so we've got an Asian population, we've got less people being born, inflation's going up, and now the yields are going up.
Yeah.
how
can't hedge.
We can't. Other people can't hedge, but now the Japanese government have gone, right, that means we're going to have to change the system whereby you go, actually, to borrow money, it's going to cost you. Yes, you the savers, it's fine, but the people that are buying debt or utilising debt to buy houses, to buy cars, but it's just going to start going up big time.
Yeah.
And yeah, it just kind of unravels the whole thing, the whole basis for how the financial sector works.
Yeah, it's Japan is really Japan. So how we've mentioned about stagflation, etc., George.
Yeah.
So Japan is basically the case study on how stagflation comes in. So Japan was really, really, really fast growing in the 70s and 80s, like ungodly levels of growth. Like it was on track to be up there with the United States. And then they entered a really interesting, I say interesting, it was horrific for them, but they entered this period of no growth. They even had elements of deflation. And you essentially ended up with these they call it the lost decade, but it was about 30 years of no growth, of deflation. I know we talk about how inflation is categorically seen as, or overinflation is seen as a bad thing in the West, but the deflation is really, really, really detrimental because people that will then put off buying things because they know it will get cheaper. And so then you have less demand, less investment, and you just end up in almost sort of that deflationary death cycle. So deflation is worse for an economy than higher inflation. And essentially we've seen Japan has basically had little to no growth for the last 30 years. And now we're seeing the government have to, because a lot of this rally came off the back of stimulus because because they need to get that demand back. But the issue is that it's so hard to get demand back when you've had deflation for so long. And obviously they come to the markets and say, look, we need to do this stimulus package. And the markets have basically turned around and gone, your debt to GDP ratio is 260%. Like this is us putting our foot down. This is the as we called it in the chat, they're known as bond vigilantes. I'd love to be one because it would just be chaos. But these are the people that really put pressure on governments, and we're starting to see the era of the bond vigilantes having their power. Because they can turn governments. We talked about the two forces that basically govern governments. You've got the popular vote, which they only have to do once every however many years of a term. Doesn't really matter too much. But the markets and these bond vigilantes are the people that have the real power. That's the reason Liz Truss went so quickly. Is the bond vigilantes said, no, we're not having this. We're not having your policies. We're not having this outlook. And I think we're starting to see that not only. So Japan is essentially the front run, but if we look, you can see a similar pattern in the United States. You see where we've had this. If I put this two in, you can see some of the similarities. If I go on to the Japanese 10-year, and here, I hate using these two. We can see where we've had this pullback here, and this consolidation for me feels like this sort of area in Japan.
Yeah.
It feels like this is currently what the US is going through. Same thing with what the UK is going through, is that consolidation before an upward rally into, and the UK's is bad. The UK's is really bad because I have been surprised. I know we were chatting about this, Justin. I was expecting in the run-up of the budget for this to push down towards this box here before a move.
Yeah.
It appears her U-turns have pushed this up, and it's interesting. We are basically at the trust budget before she's delivered her budget. I'm not entirely sure that her budget will do much to push this down, given the spending commitments on. So, yeah, it'd be interesting to watch it play out. This is fascinating, and I think also from how you trade Forex, George, is a lot of these interest rates are one of the main drivers for why Forex pairings move, because a lot of
I do follow the interest rates for
just moving around
for Forex. Not massively, but it gives me an idea that obviously if for example, this is why the Japanese GJ has been performing so well, is obviously because of the difference between interest rates in the UK and Japan. So, and you can see obviously whichever one has got the better interest rate, that's where the money flows to. So I do pay attention to it just for a more macro kind of idea as to where the market's going. So you can see when interest rates do come in on the news, you can kind of expect changes in market structure and stuff. But that's the only kind of stuff that I look at, really. Nothing, and I only check every sort of few months as well.
Yeah, it is interesting because obviously it comes off the back of Japan's decline came on the back of what's the name of it? The Accords. What was it? The Plaza Accords, wasn't it, Justin?
Mm-hmm.
Where the US agreed back, I think it was like in the 70s or 80s, the US agreed with major nations that they will try their best to push the dollar down to make their exports cheaper, and they will push other currencies up. Now, Japan's exports fell off a cliff, and as we talk about Japan being insular, still to this day, the majority of Japan's GDP and the majority of Japan's GDP and a lot of the earnings for the Japanese companies don't come from within Japan, they come from abroad, which, if we talk about sort of the similarity with the UK majority of the FTSE 100 earnings are also abroad. They've come from dollars, given the energy a lot of the energy comes from dollars, a lot of the miners go in dollars. You've got obviously the pharmaceuticals do a lot of their business elsewhere. So it's the UK feels like it's going down a similar road to Japan.
Yeah.
Yes. I think it's obviously, it was mentioned some weeks ago, and not by accident, of course. It was an issue, Japan, I think, and it's been on the cards for a while. But the bond market in general, I mean, UK's under 10 years rising, 30 years rising, exactly from sport. Also, if you'd tuned into this fine channel, you'd have known this was incoming, because the charts don't lie.
Yeah.
Not like Shakira, hips don't lie, charts don't lie. It's bad, and I think this is still the precursor to what's going to happen in the market, because yes, the stock markets are big and everyone looks at equities and stuff, but
it's massive compared.
Is it 150 trillion, did we say?
Yeah. I think it goes a little bit. I read somewhere that global debt is about 300 trillion.
It's bad.
Which is nuts.
If you calculate that out per person, it's not going to be pretty. If you think there's about 7 billion on the planet, then that's really not a pretty figure, is it? Average.
No, and you're seeing more of it come from the AI build out. So obviously, Oracle raised. I'm pretty sure Oracle raised something like. Oracle raised 100 or so billion, didn't they, on 40-year bonds?
Yeah.
And those 40-year bonds, the coupons weren't that much higher than what we're seeing sovereigns. I think the coupon, the yield on it was about 6 6 or so%.
Yeah.
Essentially, it feels, certainly from an AI thing, it feels like they're now ready to just borrow to build stuff that they hope will eventually outstrip the fall of currency and the fall of the value. It's probably, if you can get a good rate and you know something that'll do a return, it feels like a lot of companies are using this as now we're just going to borrow everything and hope that the value of the currency falls enough for us to offset the investment. It's a bet that fiat will collapse or get a lot weaker, which pretty much everyone in crypto has had that working thesis for the last 10 years. That's why crypto is a thing. That's why Bitcoin is a thing, on the belief that fiat will eventually collapse. But yeah, that's sort of the state of play, and I don't think it is a pretty outcome for governments.
The thing is that I would say, if you look at the bonds, the bond market. Well, Japan, US, and pound is the one I really look at. Japan's obviously going guarantee. UK is waking up. The US is lagging still. Yep. And whether that is a ghost of Christmas future kind of thing of what to expect.
And the outlier in this all is China. Now this is starting to creep up a little bit.
Well, their problem is obviously that is literally a Ponzi scheme, because the majority of Chinese bond market is held by Chinese banks, which are all owned by the Chinese government. So basically, it's quantitative easing.
Yes. I mean, I can't even imagine the fire in the world if Chinese 10 years gets to here. That would be bad.
Yeah.
But even German, I think Germany's quite interesting, because obviously they had their slightly different policies before they began this quantitative easing. So Germany's behind the curve, but even Germany isn't immune to it.
Yeah.
But yeah, the UK, and obviously we see the UK is down at the long end. It's down at the short end, sorry, but up at the long end.
Yeah.
But
the thing is, if you get the inversion where the short end takes over the long end, that is a whole world of pain.
That's bad.
That is when it really means sell everything, put your money in the garden, dig a hole.
Yeah, that is, or just buy a load of gold and hope for the best.
The problem with the gold side of things is, where do you store it?
Yeah. Bury that in the garden.
Bury that in the garden. It's just, it's very, very. But I think this is a precursor that the whole financial system. Again, if you tuned in, you'd have heard that this is coming down the pipe. It shows that everything's shifting, the way everything runs. So the very basis of debt issuance is going to change. And I've got to slightly pivot. I was, and go back to the US side of things. I don't know if you've been watching or paying attention to this this dividend payment of $2,000.
Yeah.
That were payable in 2026.
Yeah.
So what I found interesting, I don't know where I saw it, so I can't even tell you if I just made it up or if I dreamt it, that they haven't decided yet on the method of distribution. So obviously we've seen it as a potential tax side of things, or tax relief, or actual dividend payment. what I don't know if I imagine this or whether it's a real life thing, but I did see someone surmising that could it be paid in crypto? Have you seen that, Wiz, or am I making that up?
I saw something around whether they'd potentially use some of the Bitcoin to pay for it. It's interesting. I don't think that they would, but the issue is, I think, and one of the things that they'd have to get around is obviously if they pay it out of their traditional means, it means then that it has to have congressional and Senate approval, and obviously whilst the US Republicans have control, I'm not sure how many of the US Republicans would be keen to.
Well, as we said the other day, again, this will really screw with the bond market.
Yeah. Like this, that would move. You can sort of see. I mean, this is on the weekly. This candle here, I think, is when it was announced. So we see it's moved up slightly. And obviously you saw the Japanese, what the stimulus did to the Japanese, or the talk of stimulus did to Japan. It's interesting to watch, and it's interesting to see how these things correlate with news events. The stimulus payment to me feels like a vote winner ahead of midterms, hence why, intriguingly, it's proposed to be paid mid-2026, given the fact that they have midterm elections towards the end of 2026. It's I don't want to say dodgy, but it feels like an incentive to vote Republican.
Yes.
Particularly given the fact that those in receipt of it are probably, or they've said that they will be those in the middle and poorer ends, who may be more inclined to vote Democrat, given the fact that their cost of living has gone through the roof. It's a very interesting way to try and take some of the heat off the tariffs, because I think the tariffs haven't gone down well for the US economy. I mean, we said at the start when they were announced, tariffs don't work. They've never really worked. And I think we're seeing that in the US economy begin now, is that the tariffs have had a real tangible impact on the way of life for a lot of Americans.
Yeah, it's I'm still unconvinced of what the game plan is here and how it's all going to play out. It seems to me like there's some bad shit coming down the pipe, but might be wrong.
Yeah, and we're seeing the DXY push up a little bit more.
Again, as you would have remembered, I had a price target, if I remember correctly.
It was around here, wasn't it? Or just above?
I was looking at basically 101.
Yeah. So this sort of gap here.
Yeah. So I'm sure there is there is a gap that's around about 101, just below 101, I would guess. If it gains above that, say goodnight to bull run.
Yeah, this would be pain.
Yeah,
it's crazy just how far it's fallen though since he'd been in office.
But the thing is, again, from my macro indicators that I look at, what I can categorically say is there is. I don't know, what does the M2 look like at the moment?
Let's look. M2.
So 22. So we've had.
22 trillion.
It's obviously running up, but it hasn't spiked yet. For one, I would also suggest that the other issue with the M2 is whilst they're starting to or forecast to start printing and whatnot, when does it actually get injected? And then I don't know if you've also seen some of the articles about the Fed are worried about the liquidity in the equity markets as well, which could, again, the crypto bros will be jizzing in their pants, going, "Oh my god, man, we're going to the moon" and stuff like that. It could mean, I'm not saying it will, but it could mean that we have the injection and everyone's going to get really excited and then get bugged again.
Yeah, and it's also interesting because it'll be it's unlikely to flow straight into equity markets. So obviously, the way QE works is these are the things that they buy. They'll be buying these, and so QE will be pushing these down. We'll be pushing these yields down initially, which is why I think we're seeing a little bit of a front running of the yields going up first. As people prepare to sell off. But yeah, inherently, it's not just a case of we're going to inject billions and trillions into equity markets. It's the injection will come through these instruments, and they come through these instruments. And I must say, the people who hold these instruments aren't exactly the type who are going to be buying crypto coins that are outside of the top 50.
Or any crypto.
Or any crypto. or Nvidia at a $5 trillion valuation.
No. I think these are more like buy low, sell high kind of people.
Yeah.
I was looking at Bitcoin earlier. If we want, there's a segue into there.
Yeah.
Now,
let's go into Bitcoin.
Obviously, if you are part of my nearest and dearest, you would see my projection of what was going to happen.
Oh, it was on point, wasn't it?
And it has followed it to a T, I'd say, so far.
I think we all had pretty much the same. We had the same area anyway, didn't we? I think.
So, my view is if we do not regain above 93,600 on the weekly, quick smart, pain and suffering is incoming.
Yeah.
And even worse than where we are now, because not so much Bitcoin, I have a potential downward scenario. I haven't actually factored this into my crypto chart, but if we close the weekly below effectively 3 trillion, then I can see another 9% drop on Bitcoin, well, on the market cap, and that will mean that unholy sodomy to some altcoins.
Sodomy is the right word.
They're already so like. I was having this discussion with Hugo the other day about saying Hugo is. I said used the term bull run as though we're in a bull run, and Hugo said that alts aren't. Now, is it just not absolutely baffling that if you the textbook definition of a bull run is price delivering higher prices, right? And we've had that on up until recently. Nvidia, Nasdaq, S&P, Bitcoin, Ethereum.
Yeah.
So, can you technically use the term bull run on altcoins right now? Is the question.
See, that is a bull run.
That is a bull run.
That is a bull run.
We are in a
That
bull
is a
run.
bull run.
Are altcoins in a
That
bull run
is
though? Because
a
this
bull
time
run.
last year, altcoins were delivering higher and higher prices. So, are we still in a bull run for altcoins? Just altcoins.
Let's pick someone. Pick an altcoin from the chat. Shits and giggles. And if anyone's Zcash,
what about Cardano? You've got Cardano on there. Put Cardano on. That's a.
I'll take my drawings off. That is actually, it's actually a fantastic drawing. I've not looked at this for a long time. But yeah, this thing looks like this thing has nearly erased all of its bull run gains. We're not actually that far off.
Well, technically, that liquidation.
Yeah, the liquidity was
gone.
That is. But yeah, if I take the drawings off. That is horrendous.
So
that is literally nearly back at bear market prices.
the thing is, if you look at Cardano in general, the wick from the other week under October, if you look at the lows of the bull run, bear market, I do not see any kind of liquidation to the downside to create a breakout. So I would say this is going to carry on distributing. We've lost weekly support anyway.
Yeah.
I would say that this is going to carry on grinding down and probably take out the wick.
Yeah. Yeah. This area here. Yeah.
However, if you are bullish on Cardano and you have some kind of bullish scenario, please write into the Wizard of All. P.O. Box.
I was just reading the comments now saying apparently me and Justin look like cousins.
Yeah.
I mean, to be fair, every good looking cousin needs an ugly
George has got an absolute. You've been blessed there, mate.
I mean, obviously, I am the far better looking cousin. Every good set of cousins needs an ugly one, Justin. Justin owes me $10.
So
I
yes,
owe George 5. George owes Wiz 5. Wiz owes Justin 5. I give George 5. Where's my 5? If you owe me $5, you owe me $5.
I think that's a very good summary of just like what we're seeing in terms of global debt. That it's just leveraged against debt that is owed to people. So people are taking out debt because someone else owes them money, and someone else owes them money, and someone else owes them money, and we're seeing that. That's particularly the AI companies we're seeing now. It's basically just like we'll give you this money on it as a loan or as a purchase, which is OpenAI. The prime example. But yeah, these altcoins.
This is just what ends up leading to a crash, though. This is like 2008 all over again. All they did was just sell debt. Debt. Yeah. Oh, look, there's nobody to pay back this debt.
And a lot of it comes with the AI companies in particular, and I think this is where it'll be really interesting to see in some of NVIDIA's commentary, not so much the top line numbers. For me, a lot of it feels like because they're trading at these massive valuations on these massive growth multiples, is they need the sales to back it up. And so they're basically trying to front run a lot of their sales into specific blocks so that they can then raise bonds and equities against it. Oracle was a prime example. Oracle announced that big deal. Oracle announced, the $100 billion a year deal OpenAI, or I think it was OpenAI, wasn't it? The deal, $100 billion a year. And so they announce the deal, stock price increases, and then they go and borrow 40 billion to be able to then fulfill the 100 billion deal. It's capital raising. It's capital raising and buffing out their balance sheet to justify the immense amounts of money that they're having to spend to service these contracts that may or may not pay, because OpenAI don't have $100 billion to pay Oracle. They're a non-profit. they don't make profit on paper. They're not a public company. It's all very
I've just flicking through crypto. Holy shit! Wow.
Doesn't look good, does it?
Wow.
What's Elron doing? You've got Elron on, haven't you? EGLD, you've just gone past it.
Yeah.
What's that doing these days? Oh, wow.
Dying.
That is back. So that is actually at 2021 prices.
Yeah, that is horrendous.
Is Elron e-gold?
Yeah.
Yeah.
Did you see this?
Oh yeah, I saw you the wrecked chart.
So this one I found out, and this is quite amusing. This one is quite amusing. So there is a website, and it's quite aptly named IMF, the International Meme Fund, where you can. It's like Aave, but you deposit your memes, and you can loan your memes against. You can get USDC loaned against your memes as collateral. So a lot of people were using this mechanism to deposit memes, get their USDC, buy more of said meme, deposit that, and using that as a way to get leverage on some of these spot stuff. And Rect was one of those that was in the crosshairs of it. I'm not sure memes are particularly good collateral, but yeah, you essentially ended up with 60% down in. What's this? In 2 hours, it went down. I think it was more than that, actually. Let's have a look. Yeah, 60, 65, 68% wick to wick down in 2 hours. I did buy some down here. I had some stinky bids, and I set some limit bids, which got taken out here. So I have a little bag of this left now that is completely risk-free. But yeah, I think if we do see an alt season, I don't want to be holding spot. I don't want to be holding spot for this. It's more fun to trade. Yeah, we've got Spud in the chat. Rect is so overpriced.
So
Founder is a Chad, but also seems like a cock.
I have a soft spot for it, but I've made 40x on it, so not on much, but enough to put a smile on my face.
So is anyone bullish on any? Have you got any altcoins at all that you go, yes, I'm bullish on this?
I'm not. I still think XAI will come back from the dead at some point.
But so the question's twofold. Are you bullish on any coins whereby you go, I believe in the team and the project?
Swissborg.
I do have one.
Secondary to that is, can you support that with any kind of TA that goes, yes, that looks good? So XAI that you just mentioned looks like an absolute car crash.
Yeah.
Which is, I'm not against it. I'm just simply surmising.
Just looking at my chart on Swissborg, and the levels are actually very, very, very well respected. I still think Swissborg will continue to do well because that's a project that isn't going anywhere.
Well, the Swissborg Bull in the chat, Spud has gone, but yeah, I like exchange tokens. Exchange tokens will continue to do well. Obviously, I love Hyperliquid. I wouldn't be buying it here, but I already own some of this. But this is mental because the team, I think the team unlocks begin soon, and a team of 11 has an unlock of like $8 billion over the next 2 years. It is nuts. Like, imagine if you joined this company as a developer like a couple of years ago. Like, you would be just unbelievably minted for life.
Asta.
Asta.
Why are people so bullish on Asta? Outside of CZ saying it's great, why are you bullish? If you are bullish on it,
I'm not. I don't use Asta. I love decentralized exchanges. I think you guys know the decentralized exchange that I sing from the hilltops is, and I think will be a really good airdrop will be the lighter one. But I think lighter is pretty much in a league of its own at this point. Will probably be up there with Hyperliquid, I think, when it comes out, when we have the launch, depending on the market conditions. But I love decentralized exchanges, but I don't like Asta. And the bit that puzzles me about Asta and this whole CZ thing is CZ has a good thing with Binance, and essentially, if Asta does well, all it will do on the CZ narrative is cannibalize Binance. I think Binance has cannibalized itself to an extent, but I don't know, like I don't get how a team who created the world's largest exchange have managed to create a decentralized exchange that has one of the worst like user experience interfaces imaginable.
I mean, if you are a perps trader, do you think, how do I word this? We're all perps traders here, right? Do you actually use the decentralized exchanges to trade perps? Do we feel that there's any need for them? Because I certainly don't.
Unless it's the ghost of Christmas future, because obviously the centralized exchanges are obviously getting blamed, and I'm one of them, for most of the terrible behaviour in the space in general.
Terrible behaviour from exchanges? Never.
Therefore, is it potentially viable that the centralised exchanges get basically knobbed off in the future, and Asta becomes the decentralised friendly face of finance?
It's
an example.
Yeah, I think my base case for some of these DEXs is it then provides, as we see more and more compliance. So people like Bybit, etc., who are now playing completely by the rule book, DEXs allow them to play outside of those compliance questions. It allows them to play outside of the KYC requirements. It allows them to play in that privacy space. I'm bullish on decentralized exchanges, but I've struggled to be bullish on Asta.
But the thing is, as you know, when I'm listening to either people or just financial news,
this is from Spud.
Very good. I see where you're going with it, Spud.
This is why Spud is bullish on Asta. No KYC, no VPN, 24/7 global access. I guess there is definitely a need for that, especially in the UK.
But what I can say, right, when I'm listening to the mainstream investors, they're not talking about Binance. They're not talking about Bybit and crap like that. They're talking about hyperliquid.
Yeah.
And they're talking about So to me, if you're listening to the Cathie Woods of this world and some of those innovation funds, and they're talking about hyperliquid, to me, and they're not talking about, because really it's Gemini or Robinhood or Coinbase in the States. Is the DEX narrative going to be the legitimate, even though it's decentralized, the legitimate face of crypto interfacing for retail? I don't know. And therefore, yes, that leads into Asta becoming the friendly face of finance. Just potential.
Yeah.
But XMR, I saw Spud just mentioned that. It's had a very nice run up, but I would surmise that what goes up must come down. And the fact on the weekly, we could not close above the May 25 weekly candles, suggests we may retest the lows. So I wouldn't be surprised to see it drop all the way back down to 230.
Yeah. Down here. Yeah. I mean, this is for me the greatest DEX that's around, but I'm slightly biased in the fact that I am in line for a $12,000 airdrop from these people. Some would say that is a motivating factor. I would say I'm completely neutral. But yeah, Zcash is the same with these privacy coins.
Do you know what's really bad about Zcash?
Go on.
Or when I say bad, really disappointing. I have on my chart, an old chart that I've just looked at, my stink bid zone. Remember when I shared about 6 million charts?
Oh yeah. Was it down here?
I had stink bid at, and never bidded it, obviously. The zone for it was between $24 and $28. That might be a bit of a faux pas on my part. Wow. Yeah.
You'd have got wicked in there.
Yeah.
And there. Yeah. Because you didn't really get much of a chance for it, because you only got the wicks on. That was tariff.
Yeah.
That was tariff. That was. It is.
Yeah, that's a bit unfortunate.
The privacy coin narrative it's an interesting one. Because I think certainly there's a. You can see it's starting to run into a bit of resistance when you look at Zcash Bitcoin, because that's now pretty much at resistance.
What I don't get though, so if you look at total 3, that's fell into an area of my interest in general. But you look at what's holding that up, because most altcoins are absolutely shagged.
Yeah. Well, I think Hyperliquid's probably holding a relative element of that up, because that stayed relatively.
Well, it'll be BNB,
XRP,
Solana,
Link. Although Link's pulled back quite heavily.
Do you want to know something bad about Link?
Go on.
Another terrible story from I had the exact bottom of a range that I was interested in, went down to $8.20. And look at the wick on the 6.
You would have got filled on that one.
So what I would say in hindsight is If only I looked at my own charts and cared enough about crypto, I would have been filled on some unbelievable bids.
Had some stink bids. Oh, mind you, to be fair, I had a little faux pas as I closed my VIX long too early. Closed my VIX long at $21. That's nuts as well. Be interested to see if we see this continue to push up this week.
Was that the VIX?
Yeah.
Quite possibly. I think unless someone if someone can see that what I can't see, I do not see anything bullish altcoin wise at all.
No, others looks
chart wise.
Yeah, because when we talk about that total and what's holding it up, the others chart looks horrendous. Like we're basically back into this zone here, but just downtrending. Others dominance.
So again, another wonderful bit of charting by Justin. I have the bottom of my others chart zone. I was interested in 151.7 billion. So that is still that, and I still believe that that's where I think we need to probably fill.
Yeah, that lines up quite well though, because that is pretty much the exact level that we were at when we had the kickoff. The kickoff for what was the first run up to the Bitcoin all-time high back in March.
Do you know the funny thing with that? Do you remember the other week when I was initially saying about how much I thought Bitcoin was going to come down as a minimum? And then I said at the time, I thought that you would see alts possibly do 40% down from there. If you measure the move there from where we are now on others down to the bottom of that kind of 151 billion.
35%, pretty much.
Oof.
35% down in others. That would be painful for any altcoin holders.
Yeah.
Some of these just look horrendous.
Lots below support, like long-term support.
Like this was a project I liked, but this price action is horrendous. I'm out of that one. I am actually out of most. I think I'm out of about 90% of my altcoin holdings now. I don't hold anything. I'm waiting.
You can't bid to these things because you're below support. Why would you? No. To me, it's a gamble, and we're just nothing more than a gamble.
We're in a short. I did short this yesterday before I went to bed. Don't know what it was, but it was up 65% in a day. So I shorted it here. We are still in the whack-a-mole territory of altcoins, where you'll be scrolling through the list, you'll just see a sea of red, and you'll just see like one random shitcoin will be up. I did take a long on this purely because I think this thing is now like either dead or like anyone who bought this thing here, I just feel eternally sorry for.
Yeah.
But the thing is, like, what do these talking about scam coins and whack-a-mole? This thing coming for another one, MYX. Also, I said this to Dave the other day. Not a clue what this is. This one felt like a scam coin when it came up here and came down. Piverse.
The thing is, anything like that is if it's where was it launched? Because it's new. I don't know. I just. But there's some. You look at Wormhole. You look at Metis. You look at ZRO. really good projects, and they are absolutely railed and haven't got any support.
No, like this thing is resting on the last level of support that I have mapped out.
Yeah.
I don't even want to look at Celestia. That's horrendous. AVNT, horrendous. Celsius, horrendous.
As you know, I'm fully outside of key certain large cap holdings, which I've accumulated during the bear market. I'm out of all things crypto.
Yeah. Well, I'd just rather hold. I mean, I'm starting to take profits on some of my stocks, but like some of this stuff, I'd rather hold. Like I'd rather buy dips on some of this stuff.
Yeah.
Annoyingly.
The thing is, even if you look at the S&P, the vast majority of the companies are terrible. They're down.
Yeah.
It's only really
by these.
Yeah. And if that's not the definition of a bubble, I don't know what is.
And I mean, Figma looks like an altcoin. that is an IPO that rugged retail. But yeah, all of this is. I mean, do you see Duolingo pop?
No.
Is it a demand for learning new languages now or something?
Well, they had this multi-billion-dollar business model that got taken over by ChatGPT. No one's learning languages. But just all of these just look horrendous. But these look better than a lot of cryptos.
The thing, again, you know my views. I personally see only one thing happening, and that is until bonds do their thing.
Yeah.
Equities and then speculative assets will do nothing.
Yeah, we need these.
I would very much like to be wrong.
Yeah, you're not going to see any large scale relief on equities until this thing is moving up to here. They will be really interesting to keep on the radar. I'm thinking I'm going to do a live stream watch party for the UK budget, and have the budget on one side of the screen and the 10-year bonds minute by minute on the other side. I just want to see the chaos that will ensue.
Because obviously in the US they do much shorter yields, and they like 3 months stuff like that.
The UK strength used to be that it did a lot against the 30, and we're seeing more and more flow now towards these lower ends.
Short end, yeah.
Because why on earth would you want to loan the UK government money on a 30-year?
Yeah, it's not good.
I just find Japan mental.
But it again might be one of those case study things that people will be taught in years to come.
Yeah, this will be in textbooks. Said in the Block Pro stream yesterday on CSC, I said this: if you want to learn about theoretical macroeconomics playing out in the real world, this is it, because this is stuff that's never happened before. Obviously, on the back of COVID, we saw fairly unprecedented policy that was out of textbooks, that had never been tested in the real world, and we're seeing some of it play out, I guess. But with my macroeconomic hat on, it's really interesting, but it's also really scary because you're seeing like this unfold in real time. And there's no going back from this. The wheels in motion are moving on this. There is literally, I don't think there's not a single way of solving or stopping this without large-scale changes that are beyond that of any government on the planet.
And again, if you had listened and observed, it was foreseen by some wise people that the end of the reason this cycle is skewed is because, in my opinion, the cycle's done.
Yeah.
The fiat cycle, the pure fiat cycle is done.
Yeah. Have they got an old? How? I know none of this goes back particularly far, but look at the state of this. Like, we are literally back at like 2000 levels.
Yeah.
And that was when like you'd get a mortgage and your mortgage would be like 10 or 15%. It is. And that was before we had the amount of debt in the system that we do.
But the thing is, you could do that where you had the multiples of income. I've got another interesting thing to say. Multiples of income relative to house prices were consummate where it could support those interest rates.
You can't now.
You applied that now, basically everyone would default.
Yeah.
Everyone.
Yeah.
Not one person would be able to survive it with default.
Which is why we're seeing just the extending of the life. So I saw in the US now that Trump's pushing 50-year mortgages.
Yeah. And 15-year auto loans, wasn't it?
Yeah.
Well, that, again, if that's not the showing that kicking the can down the road.
Yeah.
And we know what happens with that because it's the same thing with the housing market.
This is it is.
So talking of the housing market, I was reading the thing about because BlackRock or the big three have been buying up real estate like there's no.
I saw that. I think Lloyd's Bank is now the third largest holder of UK residential property.
So they're buying real estate because then they control effectively the price of the housing market. So they can outbid the housing market or people trying to get on the ladder, and then effectively go, well, everyone's going to have to turn into a renting, so more akin to like the
European system, the German system. Yeah, because German home ownership's like 15-20%.
Yeah, it's really, really low. And then what do you get? And what do markets love more than anything? Reoccurring income.
Reoccurring, yeah.
And so if you go, well, we are basically pricing everyone out of the housing market, and now we've got this reoccurring every month just churn of just.
Yeah.
If you're a cricket fan, it's like turning over the scoreboard with singles. If you're an American cousin, it's like hitting like hitting singles. So you just keep it moving around.
Yeah, and the housing market's really interesting because I think on the whole economic thing. So one of the key elements of macroeconomics, and particularly the consumer confidence question, is something called the wealth effect. Yeah. Now, when people's assets go down, they feel poorer and so spend less, which was one of the factors in the Japanese crashes when you had property value starting to fall. People feel poorer and so they spend less, which is one of the reasons why you've seen this. Housing is a really, really political issue, particularly in the UK, because on one hand, there's the push from successive governments to build more housing stock, which in turn lowers pricing, which in turn lets more people on the ladder, which is popular for younger people. However, pushing that housing down too quickly or by too much reduces the wealth effect, which reduces how much people spend in the economy, which reduces GDP. If GDP goes down, the government headwinds and the headroom that they have in their fiscal budget goes down, and it gets caught in this spiral. And you see it on the other side as well, ahead of the budget. And one thing to watch out on is where she's pinned in, is the forecast and the headroom is done on GDP, is primarily based on GDP, and GDP also includes state sector spending, which is why Reeves is in a real issue if she does try and cut any state spending. Not only do her backbenchers hate that she tries to do that and will block her at every turn. It has less of an effect than raising for her on the headroom side, because if she reduces her state spending, it then reduces GDP. It reduces her headroom, and she just ends up in this perpetual cycle. She has the... I don't like her. I don't like the government. I don't like what they do. She has the most impossible job, I think, because she can't. There's literally no success that she can do. No success at all.
It's impossible situation to manage, and
They're now,
around
they're
the
now
world
talking.
is
Sorry,
in the
mate.
same situation. That's the thing. It's just, it's just a problem, and that's why it's got to unravel the whole system. In my opinion.
They're now talking about. I read a thing 2 weeks ago saying that they're now talking about increasing council tax in order to cover the pay rise that they gave to the police, the 4.5%.
Well,
now
councils have been screwed.
The thing that concerns me is that junior doctors got 22% last year.
Yeah, and they've gone back for more.
And yet somehow the typical thing about everything is always the police's fault, and everything's always the police's problem. How again is the 4.5% pay rise for cops needing to be covered over a 22% pay rise that doctors are getting plus?
Because if the backbenchers had their way, the police would be defunded.
Yeah. Sadly.
But yeah, it's I mean that junior doctor deal. I love the NHS and all of that stuff. That was a horrendous deal. I don't know who was in charge of negotiating that, but the people negotiating deals for the government are fairly poor. But this is the issue that they've got, is once you open the door to one, you've shown that the door is open, and you essentially leave it coming back. Now, without going too much, because I know it's quite a controversial issue, but the NHS has to be, from a management perspective, has to be one of the worst managed institutions I think the world has ever seen.
Well, every single public sector is the same. I was having this conversation about teachers again yesterday. Like, my eldest child is doing her, or in the mock exams at the moment, and the system's out of date. But then they change all. You know that every single department within the government are going to be, there's think tanks, there's this, and they just change it every so often just to justify their existence. I could fix the police and the funding for the police in a heartbeat, but I'm not going to get too political.
Well, as a public sector worker myself, I can tell you exactly what goes on, and I can tell you exactly what needs to sort out. But it always goes in circles, doesn't it? So something changes this year, and one thing is the focus, and then I can tell you right now, in 12 months' time, it'll be gone, and it'll be something else that was probably the focus 3 or 4 years ago. But there's so many problems with it. All like the whole, people think like, some people think 4.5% for police is good, but the thing is that also over time, there used to be so many other benefits to working in the police. The pension used to be way better. You used to get more enhancements. You used to get a bonus every year for keeping your detective accreditation in date, because it was recognised that detectives carry more risk, and they provide a higher level of service, and they take on an extra stress. So they used to get a bit of extra cash at the end of the year in time for Christmas. It's gone. It is gone. People, the rank of inspector and above, they cannot earn overtime, so they get no extra time off. They get no extra cash for working longer hours, which they naturally do for the nature of that role and that rank, especially in the detective arena. All that has gone. So to then just give a blanket 4.5% to everyone, just it's not the benefit that the outside world think is there. So, and that's just the police. So I imagine the NHS is probably very much in the same boat. Fire service as well.
Teachers.
Yeah.
Teachers.
Bin men. Yeah. And public sector is. I mean, to be honest, we're seeing a squeezing of real wages anyway across the board, and I mean this is again parallels to Japan. Japan went through this 20, 30 years ago and is still going through this. It's just this low growth. It's low growth. Yeah, it's a scenario that we are stuck in. And to be honest, Labour tend to always wreck the economy when they're in charge, and they are following on from where they are. I genuinely don't know how it plays out. I've got suspicions of how this all unravels, but I think this is a learning case study. I think that we will see play out in real time, and I don't think it will be pretty. But as traders, we play the opportunity. As economists, we learn and we understand from what the opportunity presents, and I think if you play it right, there will be money to be made, because ultimately I think you can start to see some of the decisions and why they're taken. I guess in summary, study macroeconomics and have a look at exactly why things occur, and you'll be able to see clearly just how this correlates with the assets you own, because it's a case study. But yeah, we see it now. Like, they try and buff out other benefits, and I think one of the things that is going to shoot Reeves in the foot as well is she's going after salary sacrifice, and that was another mechanism of which to provide some benefits to employees that will be cut. It's all a mess. It's all a mess.
But it does, like you say, that there's opportunities each and every day to trade and to invest and stuff like that, because there's always, throughout history, and no matter what it is, there's always peaks and troughs in all markets, right? That's the whole cycle. But in general, so much is going to change in the next 5 to 10 years with AI and robotics and stuff like that. And I said for a while, my personal belief is the whole system is going to change. Everything's going to change.
Yeah, fundamental reset.
And I don't think it'll be a hard Control-Alt-Delete reset, but in 2026, I would say we will start seeing the blueprint of the future. And I will tell you now that if the payments, this $2,000, gets made in crypto, that will be a surefire way of saying that blockchain will be the future of how stuff's going to get done.
Yeah, 100%. 100%. To wrap up then, final remarks. How do we see the week playing out across gold? We've not even touched on gold, but how do we see the week playing out on gold, indices, Bitcoin? What should people watch out for? And do we have any spiritual guidance to let people...
Volatility. Well, so for me, I'll go first, George. You've got Nvidia 1. You've also got tomorrow is going
NFP,
to be,
isn't it? Non-farm.
It's not the proper NFP, I don't think. What is it? But it's the first, especially the employment side of things. It's been a real kind of key indicator that the Fed's been using for their policies. So government shutdown's over, and so they're starting to get news trickle in.
Yeah.
So I don't know which way it's going to go. I would say personally, my personal belief is still that the S&P is due a pullback, and obviously we're running out of time to have a pullback and then rally for year end.
Yeah, because we've tested this pocket a couple of times now. The last couple of days I've had some success in longing these liquidity pockets.
Yeah.
At some point, we're going to have to see at least this one purged.
Well, what do you see? High. Sorry, a low, high, low, high, low. We know at some point in time, no matter how good the news is and stuff like that, liquidity will get flushed from the market.
And this bit's
primed. It doesn't matter if it's bonds, it doesn't matter if it's equities, it will happen. So
that's got to be purged.
To me, it looks like it will probably rally and then dump.
Yeah.
Just looking at it, it looks primed to push and then reject.
Yeah.
And then gold is just distributing or reaccumulating, whatever you want to say it. But it's I said it the other week. To me, gold is being used as a monetary or money store to kind of before it kind of moves or equities play its hand.
Because equities are distributing. I mean, that's fairly clear now.
Yeah. And it's until something changes, the sentiment is fear, I would say, in the market at the moment, in equities anyway, about the AI bubble and stuff like that. Until you get some kind of stroking of the face, telling everyone that will be all right, the sentiment won't switch to risk on.
No.
Your turn, George.
Yeah.
Short it all.
You already know I don't really do the whole macro outlook. I have my macro charts. For Bitcoin, obviously we're sat in that massive void on the weekly chart, which I would suggest is probably going to bottom around 88.7, I would say. Might be an interesting place as a potential signal if we get down there.
I've got my entry and you front run me last time.
I only opened one bid, so I have another bid down there. And then, well, shall I just show? I don't know. I'll show what I've got because then Justin can probably critique.
I wouldn't critique you.
Yeah.
This is crap.
Bitcoin on the weekly. So I'm looking at this area here. And then the other thing as well is if we come out of that area, then we've got this area here on the daily, which is probably going to be resistance until we've dealt with it, which is top about 101k at the top. So I would not be surprised if this is our range for the rest of the year. Considering we are now over halfway into November. We all know what happens at the end of the year. People want to deliberately make losses to write tax off, buy back in the new year, stuff like that. I don't see anything, people aren't anticipating anything good to come of the UK budget. So, and I know that doesn't have a massive sway in comparison to the US, but
but you can trade it. Yeah, it's a factor.
That's kind of my thoughts on Bitcoin. ETH on the weekly, I would not be surprised to visit 2.8. Similar story really on the daily. Obviously, we longed the shit out of this the other day, didn't we? Because we had this marked out from last week. So that was beautiful. But if that doesn't hold, then I'll be looking to come back down here. And again, there's a lot of areas where there's a lot of liquidity sat above us now that it's going to take some chewing through before we move higher.
Yeah.
I don't. Until they're mitigated, I don't see a scenario where we just blast back to the moon.
Yeah. Bullish breaker structure on gold on the 15-minute, not financial advice.
Well, I was looking at a retest of up here. And then Solana just looks a bit messy, doesn't it, really?
I'm short Solana. I shorted 142. Very
nice. The only place I'm kind of looking for on Solana is 122-ish, and then on the weekly potentially somewhere. Where has it gone? Potentially looking at just a bit lower, maybe around this, where we first had the bullish change of character on the daily that took us up to all-time highs. I think it was. There did leave behind an order block on the daily where that change of character occurred here. So that does go all the way down to 112. So that's another area I would be interested in. So that's my kind of short term for Bitcoin, ETH, and Solana.
Yeah.
But yeah, mainly this area on Bitcoin, which if you actually have a look since yesterday, has just been a pretty perfect range. So yeah, we did discuss the other day in our little circle, didn't we? That my thoughts were that this will be the range for a bit before anything happens.
Yeah. We need to build a base before any sort of move up.
Yeah.
So what about if we, not that I think patterns are worth a rub at all, what do you think about, because everyone's going to be looking at Bitcoin on a higher time frame, those people that like trend lines, and going to go, oh my God, we're retesting support and as trend line traded. What do you think of the scenario of pushing up in the not too distant future and forming a giant head and shoulders, and then so what would you say is the low for Bitcoin before the new all-time high? Let's do that.
I've got marked, and I may be wrong. Wizard is not always right, of course. I think we go to the low 80s, high 70s. So I've got between 82 and 78 marked out.
Yeah, I think just looking at it, what would I do? So I can see 84 to 86 potentially getting tapped.
Yeah, that would keep the structure intact as well.
It would, but we have had obviously a change of character.
Yeah.
So you could see push down, then a retest around about 105. What about a retest? Do you remember that eternal zone that we was in from March 24 to October 24?
Oh yeah, the range of death.
What about retesting that?
That could be interesting.
Down to the
wick at 48.
Yeah.
The range of death. I remember that. That was that. Interestingly, as well, the low of that range was also caused by the Japanese carry trade. Yeah.
There is one area of Bitcoin that has gone
I'll share my screen.
completely untouched in its entire life, and I think it's the only bit that has gone completely untouched, and that is 74k, pretty much 74.073. The only time Bitcoin has ever spent any time there was the daily candle from the 4th of November 2024 when we dildoed through it, and it's never been seen ever since. It's a very specific area because obviously we had the wick in April that brought us down to 74.4. We had the wick on the 11th of March 2024, which went up to 73.9. So there is a very interesting little pocket of liquidity that is going to sit there, and if we tap it, I expect
fireworks.
That is an interesting little pocket, isn't it?
But then what I would also say, all of this to take into account is if you're talking about a potential move down there and not making a new high from here, I don't think we personally go down that low, but because what would that would entail?
We did test some of it on the hourly, George.
Oh, did we? Well, I was just looking at the wicks on the daily.
You're talking another 20% then, and the mess that would make of the total chart would be very funny.
That's interesting, though.
Yeah.
But
if anybody took the signal that I accidentally flashed on gold, it's gone full profit, by the way.
Nice.
That's
an interesting one.
I had 73. Basically, the wick from the 7th of April that week. That's where I've got marked out in mine. But again, that is still a 20% drop from here. So you think as a pullback from the highs, still it's 40% pullback.
Yeah. That zone's interesting that you mentioned, though, because on the hourly there is a fair value gap there. Obviously, the fair value gap got touched by those two wicks, but it's
I'm only
never spent time in there.
It's completely valid on the daily. That's the only chart I'm kind of
valid on the weekly as well.
Yeah. So. Very interesting.
Basically, if you're holding Bitcoin, we don't want to scare you, but we think it goes lower. We're just debating as to how much lower we go.
I mean, I don't even plan out if or when price will go there. I just put these things on my chart, and if it goes there, I'll just
then you can grandstand.
Yeah, react accordingly. I don't try and sort of predict where it's going to go next. Obviously, I don't need to because I've got Justin in my life, so I just ask him to wake up and shake his magic crystal ball for me.
Ball or balls?
Both. Well, you shake the crystal ball, I shake your other ones.
If that's not a quid pro quo, I don't know what is. Yeah, so just look at pull a trend line from the lows around October 23 to then on the weekly to the bodies of September 24th, and then just carry it on up and see what you find.
From October 23.
Yeah.
So
yeah.
Like that.
Yeah. I'm not a trend line person, But you know people are going to be looking at that. You can also see the potential where people are going, look at this giant head and shoulders. But the timing that this would take to play out, so you think, let's have a look. So you're talking 161 days. So you're then looking April time. And a wise person once said, I think we're at least 2 quarters behind, if not a year.
Behind the macro cycle.
So just surmising.
It is interesting. But yeah, I think with that bombshell, enjoy the rest of your week. I say enjoy. If you are a hodler, I don't think you'll be particularly enjoying this week. If you're massively over leveraged, I don't think you'll enjoy this week. If you are a scalper and you listen to the wise men, I think you will enjoy this week. So on that, I will say farewell, carpe diem, don't get wrecked, and
see you later.
Have a fun one.